Hello, everyone, and welcome back to the world's best investing podcast. I'm back in full force now. I haven't taken a week off skiing and hiking in the mountains, and I feel brand new. Today, we're going to be looking at UiPath's Q3 fiscal year 2026 earnings report. In my last update of the company, I stated that they've actually lost focus for the past few years since I wrote my original deep dive. However, Q3 fiscal year 2026 shows that that interpretation may have been wrong. A few data points really stand out from this earnings report. One, the number of customers leveraging agentic workloads and Maestro, which is the platform to orchestrate various agents that UiPath recently released, is up 2x quarter over quarter. So that's tremendous acceleration. Secondly, UiPath is now unleashing verticalized instances of their software. And we know that has been a tremendous growth vector for a company like Palantir. It basically reduces time to value and speeds up distribution, which is really how Palantir has grown exponentially over the past few years. So putting those things together, rapid adoption of agentic solutions and verticalization, I think that the UiPath thesis has reopened once again. So if you look at this graph on the screen now, you will see this is UiPath's operating margin in the orange line in the graph. And you will see how over the past few years, the operating margin has been rising quite steadily. Now, I reached the conclusion from 2024 to early 2025 that maybe they had lost a bit of focus. I will explain exactly why now, but you will see that the uptick over the last 12 months is actually contrary to this observation. And so combined with the previously mentioned two data points, which is the rapid growth in agentic workloads and the verticalization, I'm starting to really change my opinion of this company. In case you're not familiar with the UiPath thesis, they basically have this software which is able to observe what people do at companies just by watching screens via computer vision. As you know, AI is about having more data and higher quality data than anyone else. And if you do that, you basically have a proprietary data moat, which enables you to train AI models to do things that no one else can do. And that's how you win in the AI space, or at least it's going to be one of the primary ways to win. Now, these guys have unique real estate. They have a lot of customers, and they're the only company that can truly do that. Leverage computer vision to observe what people are doing at companies just by watching screens. And that's how they're able to automate a lot of processes. To date, these guys have been automating deterministic functions. So stuff that's basic, that can be automated, like clicks, opening and closing windows, and just doing a lot of that. That's very helpful. But my thesis was a few years ago that if they can evolve from deterministic tasks to automating semantic tasks, so actually understanding documents and doing stuff like, for example, optimizing presentations to maximize sales, optimizing documents of all sorts, understanding them, just to actually maximize the output of a company per unit of input, like Palantir does, that can be quite interesting, because then what you have is the situation which is still quite aptly summarized by the graph that I shared in my original deep dive, which you can see on the screen now. So what I try to depict with this graph in my original thesis is that Palantir basically has vast data processing capabilities, while UiPath didn't in relative terms back then and still doesn't. But what UiPath has is an advantage in distribution. So Palantir actually has gone a long way since I wrote my original UiPath deep dive, and that's been primarily via AIP, the artificial intelligence platform, and the verticalization of their software, such as we saw with ShipOS last night, right? Which is the reason for which Palantir is up big time today in the pre-market. So they are basically taking the digital twin platform and making vertical instances that it's basically operating systems that are tailored for specific use cases. In the case of ShipOS, it's literally to build ships. That's probably a close cousin of Warp Speed, which is basically Palantir's platform pointing at manufacturing and stuff like that. So actually, Palantir has done very well. And my original observation was, well, and this was 2 or 3 years ago, if Palantir has amazing data processing capabilities, but maybe not so much of a distribution capability, maybe UiPath, via its lightweight approach based on computer vision, can actually harness a long-term distribution advantage. So again, I don't think this is actually an existential threat for Palantir at all. I think it's a potentially complementary thesis, because this space is so large. And as we will see towards the end of the video, the valuation of this company is actually fairly attractive. So this company has done great. These guys over the past few years seem to have lost focus. But now I think in this earnings report, you do really see tangible evidence of them moving on to automate stuff beyond just clicks. So moving into the semantic workload automation, which is how they move on to create a lot of value. There's actually an alternative explanation to this observation that perhaps UiPath management did lose focus over the past few years, which is that they actually went down into the trenches to re-architect the product. And that's something that I'm willing to entertain. It's a hypothesis which I think is increasingly plausible because you can see the operating leverage rising so quickly, especially over the past few years. You see the rapid adoption of agentic workloads, and then you see management consistently reiterating the concept of pace of innovation and how important that is. Over a decade of experience of investing in tech stocks has shown me that actually the source of any moat is process power. And that actually tends to be, in a more tangible sense, the pace of innovation. So if you are capable of innovating faster than your other competitors, you end up solving a growing volume of acute customer pains in a way that they just can't replicate because they don't operate fast enough. So it was interesting to see UiPath CFO Ashim Gupta consistently mentioning how they're increasing the pace of innovation. To me, it's kind of like the focus is back on, and that is why I'm also open to the possibility that maybe I didn't interpret this correctly, and actually these guys were sort of re-architecting the product. So I think going forward, if we see rapid continued growth across the board, and we see a little bit of an NVIDIA algorithm whereby you have just a growing top line and expanding margins and stuff like that, that's going to be a sign that most likely these guys have correctly re-architected their platform. And they're finally ready to take advantage of this real estate advantage, which they have, which is basically they have access to a lot of screens and in a very lightweight fashion. And ultimately, they do have an easier time distributing. I don't think, as I said, this is an alternative thesis to Palantir. I think it's worth watching just because this space is going to be so large. So eventually every single process within an enterprise is going to be automated. And this is at least going to be true for any process for which a lot of data can be generated. It doesn't have to be fully automated, but I do think that humans are going to be pushed out further up into the creative realm, and machines are going to be doing more and more of the automatable stuff. So you can actually see on the graph on the screen now how the EV to sales, enterprise value to sales, which is basically like price to sales, has been trending down since the peak in late 2021-ish, and is now only starting to tick up again after the lows throughout 2024, 2025. Here, I believe my interpretation of the company was very much consensus, which is, these guys have lost focus. They're not in the AI race and stuff. And I think that the activity we see here is basically the market starting to realize that, wait, perhaps these guys do have an interesting future ahead. For me, as you know, I'm very happy with my portfolio, but I continue studying companies because that's how I believe we become better investors and so forth. But I'm increasingly open to the possibility, as I was saying, of these guys actually having successfully re-architected their platform. So I'm going to continue tracking this company going forward. And that's it for today. Thank you very much for joining me, guys. As always, if you enjoyed this video, could you please share this update with someone else whom you think will enjoy it? These videos and updates are for free, and so the only way this grows is with your help. So thank you very much in advance. Oh, and by the way, if you want to learn the mental model that I use to analyze companies and pick winners early, like Palantir and AMD and stuff like that, and defend my positions when everyone goes very negative about them, like Duolingo recently, which is now trending up back again, you have access to my free 30-minute masterclass in the show's footnotes. So again, thank you very much for joining me. Have a great one and take care.